Leverage. Housing is unique in that you only need to put down a deposit, roughly 20%, in order to own the whole balance. Stocks don't work this way. You can't just put 20% of your money down to obtain 100% of its value. Let's walk through an example. In Australia, let's assume you purchase a home for $1 million and you put 20% down, which is $200,000, and let's assume $50,000 for stamp duty. So your total cash outlay is $250,000 to own a property worth $1 million. Now let's assume that home appreciates over the next 8 years by 50%. Now you've made a gain of $500,000. You don't just get to keep 20% of that gain, you get to keep all of that gain, and that is why home ownership can be so lucrative. And even better, here in Australia, you are exempt from paying any tax on your primary residence. So in my previous example, you've made a $500,000 gain. That is money in your pocket. You are exempt from paying any capital gains tax. Now, if you were to invest in the stock market and make a gain of $500,000, you would have to pay capital gains tax on that amount. You would receive a 50% discount on the capital gains tax. So you'd only be taxed on half of the amount. So $250,000 would be added to your income. And it depends on the tax bracket that you fall in, how much tax you would actually pay. On that gain, you would be paying up to about $120,000 taxes.